Materials, industrials, all hitting new highs. Is the market in that sweet spot that Michael was talking about? Should you keep buying from here? Let's find out from Kathy Entwistle, Managing Director at Morgan Stanley, and Burns McKinney, Portfolio Manager at NFJ Investment Group. You know, Kathy, we've risen. We're 4,080 on the S&P 500. The rest of this year, are we going to be eking out small gains, or is it going to be something different than that? In other words, is the best behind us?
That's a great question, Tyler, and thanks for having me on.
You're welcome.
We think that a lot of it is behind us in terms of there's been a lot of wins, but you have to be smarter and selective because there's still opportunities. It's just about looking for those opportunities and versus, stock selection or industry selection versus index selection.
You know, Burns, we're at high levels on the stock market. If you take and you discount earnings or whatever your earnings is for the S&P 500, you apply a multiple to it, you get to numbers, whatever the numbers are. But then you've got to have two things happen. You've got to have the earnings come through, number one. So that might be a little problematic. But number two, you've got an economy that may grow 7-9% this quarter and maybe 6% or so for the year. That's pretty doggone good.
It certainly creates a very reflationary, economic environment. By the same token, President Lyndon Johnson talked about guns and butter. Well, today we really have the twin engines fueling the economy of shots in arms and checks in hands. You got stimulus at the same time. You do have things starting to open up and people becoming a bit more mobile. And that suggests, although a lot of the easier gains in the stock market may have taken place, there are a lot of shifts beneath the surface. You do have this rotation for which, if we have a reflationary environment, if we continue to see interest rates stay solid, it really bodes favorably for value stocks and really specifically cyclical value.
Kathy, the economic recovery is not confined to the U.S. We're looking at manufacturing and unemployment levels improving in Japan, China, parts of Europe as well. So could that be an argument to gain exposure to international equities at a time when a lot of strategists are saying that stocks here in the U.S. are priced for perfection?
I think it's always important to have a diversified portfolio, and you do want to have exposure internationally and also to emerging markets as well. But I would agree with the earlier point. It's value, it's cyclical, it's the companies that will do well with interest rates rising and can hold their own. So we've been rotating our clients out of those names, those big growth names that have had such a run up. And we're peeling the sort of the gains out and adding them into the value side of it. And I think taking those sort of steps, really valuable for clients right now, and will make a difference and an impact in their portfolio by the end of this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.